Hello and welcome to Sectors Up Close. I'm Ramzan Karamali. Today we're looking at luxury brands and my guest is Simon French, Head of Research at Panmure Gordon. While much of the consumer discretionary sector took a hit in 2022 as consumers cut back on non-essential spending, the luxury portion of the market remained resilient. Wealthier customers' behaviour was less impacted by economic events. Most brands were able to pass on additional costs to their clients to preserve their margins. So far in 2023, it seems the appetite for luxury brands is growing even more. Revenues in the first 3 months of the year grew by 23% at Hermes and 17% at LVMH. The S&P Luxury Goods Index has performed strongly year to date. It's up around 20%. Many of the European luxury brands in the index had been waiting anxiously for consumers in China to return to stores, following the end of the country's COVID restrictions. Stringent lockdowns were in place up to the end of last year, putting a dampener on revenue in what is now arguably the most important personal luxury market in the world. As numbers for the first quarter of this year have been unveiled, it's clear that the outlook is brightening. But will a return to growth in China offset a possible slowdown in sales in embattled Western economies? Well, to help answer that and take a look at the whole luxury sector in more detail, I'm joined by Simon French from Panmure Gordon. Simon, thanks for joining us. Let's start with that first question about China. Are the fortunes of luxury brands so strongly linked to the success or failure of the Chinese economy that more than anywhere else? And if that's the case, can that make up for any sort of possible recession in Europe or the US?
Well, certainly historically, the performance of those luxury brands has been heavily geared to the performance of the Chinese economy, and the reopening of the Chinese economy following restrictions from COVID makes that story an easy one for investors to hold on to. But I would suggest there's another factor which makes it perhaps not necessarily a one-way hedge on Chinese economic output, and that is the amount of excess savings that have been built up principally by European households during the pandemic. And this were principally more affluent households who were unable to holiday, participate in a lot of social events as COVID restrictions were in place. There is still quite a lot of the top line growth for companies like LVMH and the broader sector that is directly being fueled from that divestment of those savings. So yes, China very relevant, and that's a long-dated story, but there's the uniqueness of the way consumer spending is structured post-pandemic.
The main S&P Luxury Goods Index has got quite a lot of different types of stocks in it, not just your LVMHs and your Hermes, but there's, car makers like Mercedes-Benz, Ferrari. We've got cosmetics companies in there as well. What do you make of the breadth of that index? Is that a fair reflection of the luxury goods market?
Well, of course, luxury, everyone will have their own definition, won't they, of what determines a luxury product. But I do think you are correct to point out the breadth of the market, because what the breadth of the market tells you is that consumption and conspicuous consumption changes quite a lot depending on your setting, whether it's home conspicuous consumption, travel-based, event-based, and therefore there's a different set of luxury consumption goods and indeed consumption services that make up a credible composition of the type of things that high net worths and affluent households will consume through the course of the year to live that kind of lifestyle.
We've mentioned LVMH already. I mean, it's become the first European company to have a market cap over $500 billion. Obviously doing quite well at the moment as well with sales. But then on the other hand, we had heard from Kering this week, the owners of Gucci, and their sales are only up 1%. So what's LVMH doing right and compared to what Kering's doing wrong?
Well, I'd say LVMH benefits, as you say, with the market capitalisation of the company now north of 500 billion euros. It indicates scale, and scale in this market, not just in terms of its operation market, its operational gearing, its scale of distribution, but also in the eyes of investors is very important. And we are seeing across the global equity market that investors are moving towards high liquid, high brand recognition stocks, and index funds, passive index funds are wanting to own these stocks. And you're getting a bit of a bifurcated picture. Those with that scale are becoming investor darlings, and those that don't have those scale don't attract those inflows. And it's perhaps a market asymmetry that some investors are uncomfortable, but it's the practicality of investing in the current market.
So are there particular sectors within the luxury brands sector that you like at the moment?
Well, I do like, going back to China, the one that is not just exposed to goods consumption, which was able during the pandemic to be continued. You could buy tangible goods. That part of the sector feels like we're close to an air pocket. What do I mean by an air pocket? Well, if you were able to consume goods, luxury items that could be delivered to you or you could use during pandemic restrictions, you probably over-consumed them, and therefore consumption in 2023, 2024, 2025 was brought forward into the pandemic years, and you're going to get a bit of an air pocket. So that part is what I don't like. Those that are more exposed to consumer services, let's say those that are more Instagram friendly in terms of the experiential economy, that feels to me like the type of pent-up demand that we still have. It's going to be most prominent in China at the moment this year, but I still think we're seeing across Europe and in the United States still some pent-up demand even after restrictions have been gone for some time. There were 2 years mainly of restrictions. Will you get 2 years of overconsumption of consumer services? Yes, I think that would be my takeaway.
Simon French from Panmure Gordon, many thanks for your insights.
Thanks, my pleasure.
And that is your roundup of the luxury brand sector. I'm Ramzan Karmali, and this is Reuters.